Hello, JEC. Glad to see you here. Glad to see you live. Just waiting for YouTube to start up. Hello, everyone. Welcome to Options with Doug, streaming live daily on the Discord, on Bookmap Discord, and the Bookmap YouTube channel at 1:30 p.m. Eastern Time. Before I get started, I need to go through the disclosures. General disclosure. All Bookmap Ltd materials, information, and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. Risk disclosure. Trading futures, equities, and options involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. The focus of my presentation and the focus of the Options-Doug chat channel in Discord is options order flow, the impact of options markets on stocks and futures,
Order filled.
and the influence of market maker hedging flow on price action. I have a two-step process for trading, and the first is planning, and I use positional analysis. I look at how traders and market makers are positioned in the options market and how those positions changed from day to day to develop a thesis regarding the expected trading range and volatility for the day, as well as a directional bias. And the second step in my process is execution, and I look at real-time order flow in Bookmap and real-time market maker hedging flow on Spotgamma Hero to confirm my thesis and for setups for entries and exits. And just to be clear, when I talk about setups, I will be talking about setups in an underlying asset. And that doesn't necessarily mean that trade must be taken in shares. You can take any one of these trades, either futures or in a futures underlying ES or NQ, or shares of stock like Apple or Tesla with shares, options, or futures. So my analysis is based on the options market, and I'll talk about setups in an underlying asset, but they can be taken any number of ways, and that's up to you. And questions and comments are welcome, and I will be watching the Discord chat, Options-Doug chat channel in Discord, as well as YouTube for your questions and comments. So again, I welcome your questions and comments, and it will make it more interesting for me for sure, and hopefully for everyone else if this is more interactive. All right, let's get started. So my agenda for today, what I want to talk about, go over news items for the week, mainly economic data and earnings coming out. It's a big week for earnings. Then I'll go through my positional analysis, and then finally talk about some setups. So first of all, news items for the week. For today, consumer confidence came out this morning, and then Google and Microsoft report after the market closes today. So big earnings announcements after the market closes. And then tomorrow, durable goods orders at 8:30 a.m. Eastern Time, and then Meta reports after the market closes. And then on Thursday, GDP comes out at 8:30 a.m. Eastern Time, and then Amazon reports after the market closes. And then finally, on Friday, the PCE comes out at 8:30 a.m. Eastern Time, and Michigan Consumer Sentiment comes out at 10 a.m. Eastern Time. All right, so that is the primary earnings that I follow, the stocks on my watch list, the earnings coming out this week, as well as the key economic data. All right, let's take a look at charts now, and I'll go through my positional analysis. And this is the S&P 500 futures. And before I go into detail on this chart, I want to take a look at a larger time frame. This is an SPX chart, and this is a 20-day 1-hour chart showing just price and key gamma levels as well as the expected move range for the day, shown above the light blue line here, and then the expected move for the week shown by the purple dashed lines. So again, this is just showing price and key levels. And let me point out a couple of these levels. First of all, this is the SPX put wall at 4,000, and that's the strike with the largest net negative gamma that can be expected to act as support, and that is also the absolute gamma strike or key gamma strike, and that's the strike with the largest absolute gamma. And then here is the volatility trigger and the 0 gamma level, just about at the same level, the 4115 for the volatility trigger. And that is Spotgamma's proprietary gamma flip level. Below that level, market makers' position on the gamma curve is negative, and they have to trade with price to hedge their delta exposure. And that appears to be what is what's happening now. SPX is below its volatility trigger. So in this case, market makers' position on the gamma curve is negative according to this
stop field.
According to this gamma flip level. And above that level, market makers' position on the gamma curve is positive, and that means they have to trade against price to hedge their delta exposure, and that tends to subdue volatility. So again, right now SPX is trading below its volatility trigger. And then the other primary key daily level is the call wall, and that's at 4,200, up just right at the upper edge of the expected move for the week at 4,200. And that's the strike with the largest net positive gamma, and that can be expected to act as resistance. And then there are some other levels on this chart, and let's take a look at an SPX chart for the day here. So this is another Thinkorswim chart. This is a 1-day 1-minute chart for SPX, showing a clear downtrend. And note that SPX is trading below the lower edge of its daily expected move. And this is something that I set this morning. I forgot to set it last night. So this was based on the opening price of SPX and the expected range for this morning, which was plus or minus 18 points. So that was clearly wrong, and this is the first time since I've been really tracking this daily level that SPX and the NASDAQ have traded below. SPX, ES, and NQ have both traded below their expected moves for the day, and this looks like it's bringing in the first trend day in quite a while, a downtrend day. All right, let me check for questions. And so, RJ, I just indicated this for. I'll show the daily expected moves for ES and NQ in just a minute. And for SPX, I forgot to set it last night, so I set it this morning. So this is based on the range that was expected at the open, and this is based on my reference price at the opening price today. So that's for SPX, but again, ES and NQ were set on the expected range and the closing prices yesterday. All right, so notice here that first of all, this volatility trigger, 4115, initially acted as support briefly this morning, then acted as resistance. Oops, that's the That's the zero gamma level at 41.13. Then the volatility trigger at 41.15. Really the more important level, acted as resistance, and price moved lower after that. All right, let's take a look at Bookmap now. And I've got the same levels on this chart with the addition of some other levels. So these are the Spotgamma cloud notes shown in this column, and there's the volatility trigger and the zero gamma level, the volatility trigger at 41.15. And it looks like Spotgamma is using a 22-point difference between ES and SPX. So this is in terms of SPX converted to an equivalent ES number. Spotgamma is using a difference of 22 points. I calculated it this morning at 21.25. So that's what I'm using. So my volatility trigger is just a little bit lower. And this is showing also key SPY levels. And there's the SPY volatility trigger at 411. And noted that acted as resistance right after the open. And when I talk about setups, we'll take a closer look at this. And after testing that resistance, the S&P 500 has traded lower all day. All right, so some other levels. Here's the 4100 level. This is the SPX 4100 level that was expected to act as support this morning. And it did for a while and finally broke just after 1 p.m. Eastern Time. And now the next level of support down below is the 4075 level. That's the SPX 4075 level. And also the ES 4100 level. And then finally it looks like the SPY 407 level so far is acting as support. So a lot of levels in play today for the ES. All right, let's take a look at the NASDAQ now. And for the NASDAQ, Spotgamma is using it looks like they're using the same point difference, 22 points for NDX, the difference between NQ and NDX, the same point difference, 22 point difference, again for the NDX and NQ, and that's not right. I calculated that difference at about 83 points. So Spotgamma is showing the NDX levels here, 13,000, and the call wall and the key gamma strike at 12,975, and that is using a 22 point difference, and that's not right. The difference is about 83 points, and that's what I'm using. So I'm showing in my cloud notes columns here, first of all, key QQQ levels, and that's the 315 key gamma strike that acted as resistance today. And NQ is of course a lot more volatile than ES. I wouldn't expect it to touch levels exactly like ES does. So also here I'm showing these are NDX levels. There's the 12,800 level, and then the 12,775 level, and that is the volatility trigger for NDX. And by the way, the volatility trigger for QQQ is at 318, so QQQ is trading well below its volatility trigger for today. All right, so those are the levels in play for the indices that I follow, the NQ and ES, and then we'll talk about Then we'll talk about setups in a few minutes. All right, so take profit. Ask, how do you calculate the lower edge, the daily expected move? And what I do is you can take a reference price at the open or the close, whichever one that you want, and then just look at an options chain, and for any instrument that has 0 DTE options, daily options like the ES, SPX, SPY, QQQ, all have, and NQ all have options that expire every day. So just look at an options chain, and it should give you a value, a plus or minus value. So we'll take a look at SPX here. So at the close today, what I would do is take a look at the closing price, and then just take a look at the options chain here. So the top number is the number that's for today's expiration. This is for tomorrow's expiration. So right now it's showing that at plus or minus 34.4 points. So take your reference price, the close price today, and whatever this number is at the close, and add it and subtract it from that number to get the upper and lower edge of the expected move for the day. And RJS, is it possible to know what the 2 standard deviation move was for the SPX? And yeah, I'm sure you can calculate that. That's not something that I think about or look at. All right, so those are the index products. And let's talk about shifts and levels, and there were very few. First of all, for SPY, there were no changes for SPX, no changes for NDX, and the only shift was the call wall for SPY, moving higher from 415 to 420, and for QQQ, the call wall moved lower from 330 to 320. So those are the only shifts in levels, so very minor today. All right, let's take a look at the key gamma levels so we can understand where those levels come from, what they mean. So this is SPX showing absolute gamma, and above the 0 line, the orange bars are showing positive gamma or call gamma. And below the 0 line, the blue bars are showing negative gamma or put gamma. And these are market makers' positions at these strikes. So this is SPX, and this is the key gamma strike, the strike with the largest absolute gamma. And that is pretty obvious. And then that's also the put wall. The strike with the largest absolute negative gamma can be expected to act as support. And then here is the call wall at 4,200. The strike with the largest absolute positive gamma can be expected to act as resistance. So there's the ceiling and the floor for SPX as it stands right now. All right, let's take a look at SPY. I'm going to zoom in on this chart. And for SPY, the key gamma strike is at 412. That's the strike with the largest absolute gamma. That's pretty obvious. And then the put wall at 400. Again, pretty obvious. Strike with the largest absolute negative gamma. And then the call wall has moved up to 420. So there's the ceiling and the floor for SPY, 400 and 420. Pretty much in sync with the SPX. All right, let's take a look at NDX. I may have to refresh. And yeah, I do. So let's go to NDX now. No need to zoom in on this. This is the 12,975 strike, and that's the absolute gamma strike. That's pretty obvious. And it's also the call wall. And then the put wall is not shown on this chart. It's at 11,000. And finally, let's take a look at QQQ. We'll zoom in on this chart. And for QQQ, 315 is the key gamma strike. 320 is the call wall. And then 310 is the put wall. Whoops, 310 there. All right, so that shows where all of the levels come from for these index products. Now let's take a look at the Vanna model for SPX. And for those of you who've seen this before, please bear with me. I don't know who, if there's anybody new watching this, but this is important. What this is showing is how market makers' delta notional, this light gray curve, changes with changes in price. So there's delta notional shown on the vertical axis and price on the horizontal axis. And what this is showing is when price increases, market makers' delta notional will increase, and they have to sell futures to hedge their delta exposure. And that's typical in a positive gamma environment. And remember now, the SPX is trading below its volatility trigger. Let me just check on the price of SPX. So right now, SPX is down around 40.80. All right, so again, this is showing just the gray line is just showing how delta notional changes with changes in price and does not account for implied volatility, but the pink curve does account for changes in implied volatility. And that's the Vanna effect, the change in delta with a change, that's the change in delta with a change in implied volatility. And what this is showing as price decreases and implied volatility increases, market makers have to sell futures to hedge their delta exposure. Again, as price drops, implied volatility increases, which is what's happening today. Market makers have to sell futures to hedge their delta exposure, and that tends to enhance volatility. All right, so always important to keep this in mind. Right now, the price for SPX is around 40.80, right around where I'm holding my cursor. So definitely on this portion of the gamma curve or the Vanna model. All right, let's take a look at some data now. And I'm going to focus on two items here, and this is at the beginning of the day. This is market makers' position on the gamma curve for SPX, SPY, NDX, and QQQ. And what this is showing, all of these numbers, this gamma notional, these are all positive, showing at the beginning of the day, market makers' position on the gamma curve was positive. Again, indicating that traders are short calls, market makers are long calls, hence the positive gamma position, and they have to sell against price they have to trade against price to hedge their delta exposure. And then also this Spotgamma index also is a proprietary number that shows pretty much the same information. The only one that I watch is really this Spotgamma index for the SPX, and this is positive, indicating again positive gamma, lower volatility environment. And this works until it doesn't, like a day today when price finally breaks below that lower edge, the daily expected move. All right, so let's take a look at some setups now. So first of all, let's go to the S&P 500, and I'm going to start with Hero for the S&P 500, and this is a combined signal for SPX, SPY, XSP, which is not significant, and then ES futures. So this is tracking options trades for all these instruments. That's shown with the purple line here, and then the white is showing price. So this is the S&P 500, and what this is showing is again options trades and market maker hedging activity, and it's a combined signal. Let's just take a look at the components. So first of all, notice that this is actually positive. The delta notional, this number here, and I'll zoom in on this chart in just a minute, is just over 1 billion, positive 1 billion. So traders are trying to fade this move with options trades, and we'll take a closer look and see what they're doing in just a few minutes. All right, so let's take a look at the individual components. Let's start with SPX, and notice here that this is bearish, minus 617 million. That's the notional value, and the line for SPX is much more in sync with price. So that indicates to me that this is what appears to be driving price action as far as options go. The trading in SPX. And let's take a look at the next one, which is SPY. And that is what has appeared to be the case for a while now, that the SPY traders are trading in the opposite direction of price. So as far as a signal for trading, the SPY has not provided a good signal, the SPY Hero signal. And then finally, here's the ES futures, and this is more in line as well, in line with price, in sync with price. And so the total signal again, SPX, a little bit more difficult to read, but this is the total combined signal showing how options traders are positioning in the options market. Let's take a look at puts and calls. So they're buying calls and buying puts. This is pretty typical of an index product, and it looks like this notional value for calls is actually higher than, so this is positive 2.4 billion versus minus 1.6 billion. So call buyers are dominating put buyers, but price action is definitely bearish today. Let's take a look at 0 DTE. This provides a very clear signal. This is what 0 DTE options traders are doing today in the S&P 500. Again, this combined signal, and this is net negative 484 million. So if you're looking for a signal for trade setups, this is the what appears to be the best signal, 0 DTE. All right, so let's leave this up and let's take a look at the S&P 500. So really looks like there were a couple of setups. This first setup, kind of a late confirmation, and then this was the best setup of the day. Notice the lower high in Hero, and price moves up. Again, Hero making a lower high and then reverses. That's at 1120. So let's go take a look at Bookmap now. And there's the reversal at right at the lower edge, the expected move for the day, that blue dashed line, and below VWAP, and then also the SPY 314 level. Whoops, that's NASDAQ, sorry. So here is it's actually a little bit more clear in the S&P 500 here. Here's this setup. Reversal at the 4115 volatility trigger, and I pointed that out before. So this is what I'm talking about right here. Wrong tool. And let me just turn off I'm going to turn off the heat map just to make this a little bit easier to see. So I know there's a large cluster of levels here, but I think the key level is this 4115 volatility trigger, and also VWAP, and price reverses lower as traders were taking negative delta positions, the 0 DTE S&P options traders. And note the bearish order flow here, that this light blue line is showing that that large traders were selling this move with their iceberg orders they used to hide their size. Then once price starts to move lower, sell stop orders shown by this yellow line here start to fuel the move lower. And then CVD is negative. That's shown by this pink line in the subchart. All right, let's zoom out. So as far as using an options trades for your setup and using Hero, that was the best setup for the S&P 500. Right there, the reversal at the 4115 volatility trigger. If you missed it at 10, patiently wait until 1120, then there's your setup again. All right, so that's the S&P 500, continues lower. Now it looks like it's broken below the SPY 407 level and heading down to the next support level, which is the 4075 level. All right, so that's the S&P 500. Bearish order flow, bearish hedging flow after 1120. Let's go back and take a look at Hero again. 0 DTE again makes a lower high there, and price begins to move lower, and 0 DTE options trades are looking like they're helping to drive price lower. All right, let's take a look at the NASDAQ now. So that's the total signal, all expirations, and really in sync after about 11:20 as well. All right, for the NASDAQ, we'll take a look at QQQ. At least in the morning, it was in sync with price action. Setting up shorts here at 9:45. That's the just below the 315 key gamma strike, the resistance there. That's shown here. Then Hero price continues to move with Hero. Up until about 10:30. Let's zoom out. So the signal is not as clear really after about 12:30, this large spike. That's a large block order. All right, and JEC said something about a spike on QQQ at 10:07. What time zone? All right, let's take a look. All right, so it looks like that's what he's referring to. It's right here. So let's take a look and see exactly what that was. So it looks like traders continued to buy puts, and that looks like probably a pretty large order selling calls. Let's zoom in on this. So just like we saw on SPX, traders are buying puts, shown by this falling blue line. They're buying calls, and so far the call buyers are not having much influence on price. It looks like the put buyers, along with order flow, are helping to drive price lower. All right, so that's QQQ. And let's go take a look at the NASDAQ now. All right, let's take a look at NASDAQ. And in a strong downtrend. And there's the reversal at 315. At the 315 QQQ, key gamma strike. Price continues below the volatility trigger. And there's the move up, similar to ES at about 11:20, and then price continues lower from there. And notice in this case that both CVD is falling and sell stop orders are fueling the move lower, and then larger traders are actually fading this move. That's shown by the rising light blue line. That's showing that large traders are buying on the way down with their iceberg orders they use to hide their size. All right, so it looks like price may be heading down to the QQQ put wall. at 310. All right, let's take a look at let's just take a look at SPY. Well, actually, we're looking at NQ. We'll go to QQQ and then we'll take a look at SPY. So this is the biggest range on QQQ in a while. There's the reversal at there's the reversal at the 315 key gamma strike. And now price is trading down below the 311 C4 level. And RJ asked, would you see today as indicative of volatility sellers getting squeezed? And yeah, I guess that could be a possibility. What Hero is showing is that net for the index products for the S&P 500 and NASDAQ, that traders were buying puts and buying calls. That's what Hero is showing. So they're actually buying volatility, and the put buyers are having a good day today. At least that's how I interpret it. You know, I'm sure there are people trying to sell puts today. No, market makers are not getting hit. Market makers, they hedge their delta exposure all along. Right, JEC, market makers immediately hedge. So, you know, they don't care. They're hedging immediately. They're making markets and hedging. So if they were getting hurt, they wouldn't be in business. You know, they have algorithms that are, you know, constantly computer servers that are constantly making markets and hedging, keeping themselves delta neutral. But as I showed before, on this portion of the Vanna model, this portion of the Vanna curve, that market makers are trading with price to hedge their delta exposure. All right, so that's QQQ. Those are the levels that are in play for QQQ. Notice at this 1120 reversal, the that sell sweep shown by those bright red dots just at the 314 level and VWAP. All right, let's take a look at SPY now. So SPY, here's the resistance at the 411 volatility trigger first thing in the morning, just after the cash open. And there's the 1120 reversal at this 410 large gamma strike. And oops, I've got the wrong colors here on these 409, 408, 407. I need to fix my spreadsheet. And price continues lower. All right, let's take a look at some stocks now. And the first I want to take a look at is NVIDIA. And really, in the current environment, the only stocks that may change after today, but the only stocks on my watch list that are really moving are NVIDIA, Tesla, and maybe Microsoft. There's just not much range in the other stocks that I follow. So here's NVIDIA, and let's take a look at Hero for NVIDIA. And Hero is often much easier to interpret for single stocks than for the index products. So here's NVIDIA. Note the strong correlation between options trades, hedging flow, and price action. And traders are selling calls and buying puts. That's shown by the falling orange line and the falling blue line. And it looks like now that activity has leveled off somewhat. And note the strikes, the key gamma strikes in play. Here's the hedge wall at 265, and then the key gamma strike and the put wall at 260. All right, let's go back and take a look. I'm going to zoom in on this a little bit. So we'll look at the morning setup. And this is just a strong confirmation of hedging flow and price action. And JEC says he thinks Hero is easier for indices, S&P 500 especially, than underlying equities. It varies from day to day. If you're looking for a divergent setup, you're more likely to see that in the S&P 500 than a single stock. And that's the type of setup that I like to look for. I like to look for Hero moving one way, price moving the other, up to or down to a key level, and then reversing at that key level, getting in sync with the options trade. So that is that type of setup is much more likely in the S&P 500. So here's NVIDIA. Let's go take a look at Bookmap. And remember, 265 is the hedge wall. So there's the reversal lower. Just after the open at the 272 level. And the primary target at the 265 hedge wall level. Notice all the liquidity at that level. Those are, as price heads down, those are passive buy orders, limit buy orders. So that's the setup on NVIDIA. And notice as Hero levels off, options traders level off, then price levels off. And if they start selling again, the next target down below could be the 260 put wall down below. And note all the liquidity at that level. All right, let's take a look at Tesla. And Tesla has been bucking the trend today, in an uptrend this morning. Now it looks like it's rolling over. Let's take a look at Hero for Tesla. And with Tesla, there's typically a strong correlation between hedging flow and price action. And notice, again in the morning, a strong correlation, uptrend. And then now, zoom in on the afternoon here. Hero's starting to make lower highs, and price is starting to make lower highs. Shown starting about 12:30, 12:20, 12:30. And note the hedge wall at 163, I'm sorry. Here's the put wall at 160, and that did act as support this morning. It took a while. And then here's the hedge wall, and that has acted as resistance. So not a lot of range for Tesla. 3 points, that's not much for Tesla. All right, so let's go take a look at Bookmap again. So here's the 160 put wall. And again, it took a while, but that did act as support. Price was making a series of higher highs and then finally breaks above the 160 put wall and then found resistance at the 163 hedge wall and now is moving lower. All right, so RJ wants to take a look at Amazon. Amazon definitely moving lower. Let's take a look at Hero. When I looked before, I didn't see much. I typically look, or I want to show in this presentation stocks that have a strong correlation with hedging flow. Not quite as clear in Amazon. Let's zoom in on the morning. Definitely a divergent setup in this morning. Reversal at the 105 key gamma strike. So here's the 105 key gamma strike, and notice that price was actually making slightly lower highs as Hero was dropping lower. That didn't last long. So let's go take a look at Amazon. So 105, again, that's the key gamma strike, and price reverses lower. All right, so there was, RJ says, there was a test of the key gamma strike at 10 o'clock. Not quite, it looks like it did not quite get up to that level at VWAP, reverses at VWAP just below the key gamma strike. And notice the bearish order flow coming in, all those pink volume dots. Again, that didn't last long. Price chopped around the 104 level for quite a while, and now is moving lower. Let's go back and take a look at Hero. And note, I have, just in interest of my own time, I have stopped marking the key gamma strikes in my Bookmap charts for stocks. It's just takes too much time in the morning. So I've stopped doing that. Those are shown on these Hero charts, so that's what I'm using. All right, one other stock. Let's take a look at AMD. And here there was a stronger confirmation between hedging flow and price action. So let's go take a look at Bookmap. Take a look at AMD. All right, so JEC says he copies the Equity Hub section and references the cells in my custom notes to get the key gamma strike and other levels for equities. So that sounds like a good idea. Maybe you can provide more details on how you do that. So for now, I've stopped doing it. You know, those levels are shown in the Hero charts. So here's AMD. And remember that Hero is moving down, and this is a pretty good move for AMD, 3 points lower. Okay, great. Thank you, JEC. Right, so that's AMD. Let's take a look at Microsoft. Let's go to Hero for Microsoft. And 280 is the hedge wall. 275 is the put wall. And this is what I saw this morning, is that put buyers, there's kind of a, if you break out puts and calls, traders were buying puts starting just a few minutes after the open, and price responded lower. They initially started buying calls, and that didn't last long. Meanwhile, other traders were buying puts, and price moved lower. All right, so let's go back and take a look at Bookmap. Remember, 280 is the hedge wall. So here's the setup in Microsoft. Trend break here below the hedge wall at 280 and below the VWAP, below VWAP. Microsoft is one of those stocks that has such a large opening print and especially such a large closing print that you have to zoom up the size of the volume dots to account for that if you're showing either the open or the close. All right, let's take a final look at the indices. Start with ES. And looks like it may have found some support around the 4100 level. And JEC says he has to scroll that opening dot off the chart. Yeah, so I'm showing this for presentation, so I like to show a zoomed out level. So in that case, I have to increase the size of the dots for stocks. Let's take a look at what options traders are doing for the S&P 500. So let's go back to the S&P 500. So it looks like now they're shifting to positive delta positions again. They've been trying to support this level. We'll take a look at what the 0 DTE options traders are doing, and not so much. Maybe leveled off a little bit. And let's take a look at QQQ. And then we'll take a look at NASDAQ and wrap it up. So leveled off a little bit. Let's see where NASDAQ found support. So far around 12,850, below that. And again, remember the 310 put wall is down below. And notice there's really been no shift in the order flow shown in the subchart there. Sell stops and CVD still falling, it looks like. So there are a few iceberg buys coming in. All right, so those the stocks that I saw that were good short setups, especially well, Nvidia, especially on the short side, Tesla on the long side, AMD and Microsoft, and then the index products, ES and NQ, both good shorts, as well as QQQ and SPY. All right, my time is up. That's all I have. I want to thank everyone for watching. Thanks for your questions and comments. Special thanks to RJ and JEC for your active participation today. It makes it much easier for me when I know that people are watching and making good comments and questions. All right, thanks again. I'll see you tomorrow. Bye.